Welcome back. Lauren, it seems like just yesterday everyone was talking about the global economy, the flat earth, and all of that. Now we're in a much different period when people are talking about deglobalization. What does that mean for consumers and for the world economy?
Well, first, I want to just acknowledge that there is a major change in the trend of globalization or global activity. I think, though, that deglobalization is a misnomer, and I don't really want to quibble over terms, but I think the difference is important for investors. So what we're seeing in terms of US and China, or really China and the Western world decoupling a bit, focus on supply chain resiliency as a result of the pandemic and these geopolitical trends, is a re-globalization of the economy, where there's redundancy being built into supply chains and new structures and negotiating tactics being built. And when we look at some of the world's most important and most delicate supply chains, like technology, like energy, even global finance, we find that resiliency and redundancy that's being built, and the difference is essentially between deglobalization and a re-globalization, is really important because it lends to, for one, the infrastructure trends that we are identifying. We know that so much is going to need to be built as a result of this changing global structure, and also because of inflation. While global trade and supply chains can impact prices that you and I pay for goods in varying ways, we believe that this trend is resulting in a firming of inflation that's important for policy ahead.
We've gotten to where we are this year in the stock market, largely on the back of big tech. Have we passed the moment when you'd advise consumers to be looking at big tech? Should they be looking elsewhere?
It's such an important question because it's hard to swallow the valuations that we're seeing in mega cap tech. But I do think, for starters, that generative artificial intelligence is a trend that's here to stay, and that some of the dominance that these mega cap companies have seen is likely to be resilient over the next couple of years. There's a market share and an importance in their data structures, algorithms, the role that they're playing that we think is really important. But for investors to really capture, again, what we think is an important trend ahead, we're taking a broader approach. So that includes the mega cap companies, which we see as the foundational layer of generative AI. We also want to look at the physical layer, so the digital infrastructure that facilitates that investment, and also the application layer, the new companies and ideas that are going to create a total level up from 4G technology and 5G technology that likely lend themselves to small and mid-cap growth companies alongside the mega-cap tech.
Thanks very much. Get breaking business news as well as the stories behind today's headlines at QZ.com.